Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. The general trade setup as of now looks decent. Most of the global markets did well. Let's take a look at the US markets. The Dow was up almost 1.5%, and the S&P and Nasdaq too managed to inch up in trade, except for CAC, which was flat in trade. The other markets did manage to move up. The FTSE, the DAX, all of them moved up. And even in Asia, if you're looking at it, most of the markets are trading with a positive bias. The SGX Nifty 2 is indicating an open of over the 10,700 mark in trade, so it's up almost 40 points, but remember, it's still 1.5 hours to go for the markets to open. Now, if you're looking at the ADRs, all the ADRs ended with a positive bias. Tata Motors led the way with a 4% up move, post strong comments that came in at the analyst meet. Vedanta, Wipro, ICICI Bank also managed to move up significantly. Surprisingly, even HDFC Bank saw significant amount of buying when the stock here was not doing well in trade. Now, commodities, yesterday crude fell in almost 1.2%. It's managed to recover some bit of losses from yesterday's low. So Brent is at 75.55 and WTI is inching close to the $65 barrel per mark. Most of the base metals on the LME ended with a positive bias. Big gains coming in from some of the commodities like aluminium and copper, which were up almost 1.4 to 1.7%. Overall, if you're looking at it, even lead was up almost 0.4%, and tin was up almost 1.6%. The only thing that didn't do well was nickel, which was down almost 0.7%. But strong rally coming in China. Look at what's happening on the copper side. Copper is up almost 2%. Steel is up almost 2.3%. Aluminium is up almost 1.2%. So strong rally that's coming in on the aluminium, on the metal side and the base metal side across the globe. Now, what are as far as gold is concerned and precious metals are concerned, they're trading rather flat in today's trade. FIs have been sellers, not much of selling, but 81 crores of net selling. DI has bought in almost 712 crores. On a month-to-date basis, DIs have bought in 812 crores. FIs have bought in almost 3,200 crores. But remember, a lot of this goes because of the FI window opening in HDFC Bank. So a lot of money will go in because of that. As far as the Nifty was concerned, the Nifty managed to rally in 91 points, but traction was seen on the mid cap and small cap end of the market. The sectors that did well were the ones that got hammered over the past few days. So PSU banks and Nifty Pharma did well. They were up almost 2.5% and 1.4% respectively. The other sectors that did well was the real estate pack and metal pack, which have been under tremendous pressure over the past few days. Now, if you're looking at the Wix also, the Wix cracked 6% given the fact that the market looked extremely strong in yesterday's trade. Overall, the Nifty was up 90 points. Infosys, SBI, Reliance, ITC contributed. On the dragging side, it was HDFC Bank which was down, which contributed. On the negative side, still not moving despite the FI window being open. But Agam, what are you seeing on the FNO side?
Well, a surprising up move for the Nifty after the RBI rate hike coming through, but no change in the open interest. As you can see, less than 1% for the Nifty futures. The Bank Nifty futures, however, after many days of unwinding, has started to see some accumulation where open interest is up around 1.6%. The India Volatility Index, that one might expect, has also come off, down nearly 6% at around 12.5, also breaking below the range of 13 and 14 over the previous few days. More writing coming along around the 10,500 and the 10,600 puts, and this also provides near-term support. And moving in, we have Rampur Chini, which has moved into the FNO ban, expect restricted trade there. We're also keeping an eye on three other stocks which have moved up. NIT Technologies, looking at fresh longs. The other stock which is doing well was Reliance Communications. We also saw fresh longs there. And Arvind, we did see the stock move up, but substantial unwinding coming along when its open interest is concerned, and hence short covering coming along in Arvind. So a lot of stocks to keep an eye on as well in today's day of trade as well. But now let's go across to Paul Allen for the top international headlines.
North Korea watchers say the regime is destroying its missile driver and testing facility near the city of Kusong. 38 North says it's the only known site that's been used for land-based mobile medium-range missile launches. The report comes just days before the summit between Kim Jong-un and President Trump. It's not clear whether the destruction of the facility is temporary or permanent. And President Trump heads towards the summit, insisting that North Korea makes the first move and commits to a timetable for abandoning nuclear weapons. One US official tells us the president is being advised not to offer Kim any concessions, to put the onus on the North to make the meeting a success. Other officials say the president will walk out if the talks don't seem to be going well. Optimism that the US and China can avert or weaken their trade spat is reflected in Beijing's purchases of American oil. Sales increased by about $1.2 billion in the first 4 months of 2018 compared with a year earlier, thanks to stronger crude prices. America sent about 330,000 barrels a day of crude and condensate to China through April, up from about 120,000 a year ago. The number of people killed by Guatemala's Fuego volcano has risen to 99, but authorities say at least 200 people are still missing 5 days after the mountain erupted without warning, dumping tons of superheated ash and gas on local villages. Fuego had been simmering for years, but volcanologists didn't recommend an evacuation on Sunday as they felt its activity was weakening. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
On to equity markets, Indian equity markets. Talk of the day is HUL. Clearly, it held an annual investor meet yesterday, where the management met various analysts, where it discussed about the initiatives on digital and data analytics, where they said that they're executing the key tools like Livewire and Jarvis, which is expected to fasten the process of decision making. Also, it said that the focus continues to remain on premiumization, where the home care segment, which is still tilted towards two-thirds of it, which is tilted towards the mass side, they'll continue to focus to drive premiumization in that segment. Along with that, in core brands like Knorr and Kisan in the food segment, it also said that it's going to continue to focus on expanding the naturals across the segment, continue to invest in new categories like face wash, and you have hand wash, conditioners, which have been built drastically over the last 3 years and have been growing at almost 2.5 times the company's average to capture consumer migration towards naturals. Also, they'll continue to have their focus on e-commerce and data analytics. The company now remains agile and also ahead of its peers in terms of e-commerce, and the market shares in e-commerce is higher than that of the high trade in terms of the modern trade, which in turn is higher than the general trade. In terms of the analyst meet which was conducted, the various brokerages' reaction on that, while Citi and Jefferies, Credit Suisse, they all maintain the rating of neutral, outperform and buy on this counter. However, it's only Credit Suisse which has actually gone ahead and increased the target price for HUL from 17 to 1750.
Let's also get your check on the commodity space, starting off with oil prices. Currently, if you look at the screen, WTI is trading about 0.3% in the green. But remember that this is on the back of a more than 1% decline overnight. Now, this is largely on the fact that we had a surprise inventory buildup. So EIA has reported an inventory buildup of nearly 2 million barrels for last week. This is as compared to an inventory decline that we were expecting as per a Bloomberg survey and the API forecasted data. And now, if you look at the base metal space, the index itself has risen for more than 1% for the second straight day now. As far as individual base metals are concerned, copper was at a 3-month high and it rallied for a 5th straight day. Aluminium, as per Harbour Intelligence, it will be in surplus outside of China if the Rusal ban actually ends. So we had aluminium, copper and tin which surged more than 1% each, while we had nickel and zinc which saw some bit of softness on the London Metal Exchange. But if you look at the Shanghai Futures Exchange, most of these base metals have in fact started on a positive note. Shanghai Steel, leading the way, up about 1.5%. Now, if you look at the precious metal space, gold prices are flat, close to the 1300 mark, as the market is now awaiting the Fed rate decision.
Well, back to local equity markets, bunch of stocks that we'll keep an eye out. To begin with, we'd be tracking Sadbhav Infra, where the board of directors have given the nod to raise as much as 3,000 odd crore via issue of various securities. Also on the list, we are tracking Hudson Agro, where the board of directors have given the details, or rather approved the details of right issue, which is expected to start on June 14 and go until July 4th, where the company is expected to issue as much as 95 95 odd shares, 95 lakh shares at a price of around 555 per share, which means a good discount of over 20% from the current market price. Also, we are tracking this morning Lemon Tree, which has signed an agreement for as much as 104 room property in Madhya Pradesh. The hotel is expected to come on in as much as FY 2020. And also Dollar Industries, which has got BSE not to listed shares today. And also we're tracking BEPL, which has commenced, or rather resumed the commercial production at MP plant post a fire accident. Also we have in our list City Union Bank, which is expected to meet various fund houses including ICICI Prudential and Kotak.
The morning after the interest rate cycle is turned, there's only two questions you can ask. How long will interest rate hikes continue and how high will interest rates go? Not to say that we have an absolute answer for you on that, but before we get to telling you what economists are saying, important to take a look at the rate hiking cycle and then the rate cutting cycle that followed. We came off a peak of about 8%, went all the way down to 6%, and now we have seen that cycle turn. For the first time in 4 years, rates have been hiked to 6.25%. Pause here for a minute to talk about some of the theoretical issues. The theoretical debate is that if rate hikes have started early on in the inflation cycle, and if the inflation targeting regime has made a dent on inflation expectations in the economy, then could this cycle be a far shorter cycle, at least in terms of the quantum of rate hikes, and could the peak rate rest at well below that 8% mark that we had seen as the peak in the 2014 cycle? Don't have a clear answer to that, but that is worth pondering upon. For now, what economists are telling us is that it will be a shallow rate hiking cycle. That was words used by Kotak Mahindra. India Ratings expects one more rate hike. JP Morgan also expects one more rate hike at least this year, and that could come in October, they said. Nomura expects a rate hike in August and then a pause thereafter. So the expectation is that based on the data available so far, you could see one, perhaps at the most two more rate hikes from here on. Beyond that, it remains data dependent. If that sounds like a cop-out, it's actually not a cop-out. And the reason for that is in this chart. Data is evolving quite quickly on the inflation side. There was a unanticipated steep spike in inflation expectations in the May round of the inflation expectation survey conducted by the RBI. In fact, that was the key reason cited for the hike in rates as well. But what is this inflation expectation spike telling you? Is that going to reflect in actual wage changes and then in changes in terms of the actual inflation rate? We'll only know the answer to that as and when it happens. That's the economic story. How did the story play out on the markets? Again, interesting reactions in the market, and this was pointed out to us by R. Sivakumar of Axis Mutual Fund. The short bond yields actually came off following the rate hike. The reason for that is more technical than it is economic. The RBI has allowed banks to take a larger carve out from the SLR, 13%, and use that towards their LCR requirements, and that gives them a little bit of a liquidity relief. That's why you saw the short bond yields come off. The long bond did see an uptick in yield, so the 10-year yield closed at about 790, which is still telling you that there is an expectation of higher interest rates. There are also, of course, other factors at play here, which is fiscal deficit, global markets, etc. But if anybody was hoping that you would see relief on bond yields or on borrowing costs based on the market costs, that did not happen. You also did not get any relief in terms of the liquidity stance of the RBI. In fact, quite a tough stance being highlighted by the RBI governor, who said that, look, our liquidity injections are going to be driven by the need to anchor the call money rate to the repo rate. So any hope that the elevated bond yields would prompt the RBI to do large-scale open market operation bond purchases, well, that hope is out of the window. That's the sum total of how we've gone through the rate hike, the first rate hike in the cycle.
The ordinance brings in several important changes for the Insolvency and Bankruptcy Code. Right on top of that is good news for home buyers who will now get categorized as financial creditors. They will be able to initiate insolvency process. They will get a seat at the creditors committee table. But how it will work in practical terms, in terms of who among, let's say, the 20,000 home buyers will be represented or will represent the entire category, those kind of challenges will come up top, experts say. The second important change is relief for promoters of MSMEs who will now be allowed to bid for their own companies as long as they're not willful defaulters and they do not attract any other disqualification not related to a financial default. The third important change will bring welcome relief for entities like private equity funds. What the ordinance says is that Section 29A that lays down the disqualification criteria for resolution applicants will not apply to pure play financial entities from getting disqualified on account of NPA. And an NPA acquired under the Insolvency Code shall not disqualify an entity for 3 years. So what it essentially means is like, let's say a private equity fund which acquires a stressed asset will get 3 years to revive that asset, and in this 3-year period such an entity can still go ahead and bid for other stressed assets. Another important change has to do with the timelines and processes of the insolvency process. This is one of the most litigious area in the ongoing NCLT cases, which is should late bids be accepted, should late bidders be negotiated with. What the ordinance says is that such late bidders and late bids should not be or cannot be entertained. How much will that weigh on the ongoing cases? Because the ordinance is prospective. So if at all the courts will take cue from the ordinance in terms of the thinking of the legislature, we'll know in the times to come. The final change has to do with the change in the voting threshold. So currently 75% of the COC needs to agree for a decision to go through. That threshold has been brought down to 66% for key decisions, and for some of the other decisions it has been brought down to 51%. And finally, the ordinance clarifies that the moratorium period will not apply to enforcement of guarantees. So promoters and holding companies who may have given guarantees in favor of corporate debtors, those guarantees can be enforced by lenders.
The government has initiated investigations against auditors resigning from companies citing inadequate reasons, and the central government now intends to collect more information based on what grounds these resignations were made by these auditors. Queries have been sent under Section 143(12) of the Companies Act based on about 15 complaints that were received by the central government. According to Section 143(12) of the Companies Act, if an auditor during his course of audit finds out that there's any fraud undertaken by a company or any of its employees, has to report immediately to the central government. Recently, auditors of Vakrangi Limited, Atlanta Limited and Manpasand Beverages resigned citing inadequate reasons days before signing the annual accounts of these companies.
The Mumbai bench of the National Company Law Tribunal admitted Videocon Industries under the Insolvency and Bankruptcy Code earlier on Wednesday. Now remember that this case was originally filed by State Bank of India at the NCLT back in December 2017, but the case has been facing multiple delays. Videocon Industries was listed in a list of 29 stressed corporate accounts, which the Reserve Bank of India had listed as part of the second NCLT account list, which was sent to bankers in August 2017. Bankers had been given 6 months to resolve all of these cases outside of the NCLT, failing which by December 2017 these cases should have gone into the NCLT and gotten admitted and been resolved there. But now finally Videocon has been admitted, and Anuj Jain from KPMG has been appointed as the interim resolution professional in the company. Remember, Videocon Industries has also been under stress for a very long time. Since 2016, bankers have been meeting under the Joint Lender Forum network to try and resolve the stresses within Videocon Industries. However, efforts there have not really resulted in anything material. In fact, Videocon Industries had tried to sell some of its assets, monetize them, and then repay the lenders, but even that did not lead to any serious results. Eventually now, the company has gone into the insolvency and bankruptcy process. Still, it remains to be seen whether the promoter will come in and try and object against this decision by the NCLT and whether this case actually goes through the whole insolvency process and gets resolved.
Well, here's the top 3 stocks that you need to watch based on yesterday's delivery buying and selling. The first stock on the list is Voltas today. Now, that was up about 2.5% in trade yesterday and saw delivery buying in excess of 100 crores. The delivery volume surged 150% at nearly 19.5 lakh shares as compared to its 5-day average, and the total volume more than doubled at nearly 39 lakh shares as compared to its 5-day average. Second stock to watch out for from the index, Z Entertainment. Now, that was up about 1.2% 2% in trade, but saw delivery buying of nearly 150 crores. The delivery volume more than doubled at nearly 27.5 lakh shares as compared to its 5-day average, but the total volume surged only 20% at about 42 lakh shares as compared to its 5-day average. Last and final stock, Coal India, now that was up about 2% in trade and saw delivery buying of more than 100 crores. The delivery volume more than doubled at about 35 lakh shares as compared to its 5-day average, and the total volume surged just 13% at about 58 lakh shares as compared to its 5-day average.
After decades of limiting families to just one child, China has a new message for couples. Please have another baby. Why the change of heart? In short, China is aging and losing its working population. Although China changed its rules in 2016 to allow couples to have as many as 2 children, that hasn't convinced enough parents to have more than one. High living costs, long work hours, and surging childcare expenses means that many couples feel that they can only afford to have one child, or even none. On top of that, a study found that 33% of women had their pay cut after giving birth, and 36% were demoted.
If they want to reverse the demographic trends that they're currently facing, they will not only have to deal with the cost of having a child, they'll also be fighting against demographic and social trends in which people are having fewer and fewer children.
To counter that trend, the government is considering lifting all limits on the number of children a family can have. Otherwise, by 2040, 1/4 of the world's most populous country will be 65 or older, which threatens an economic boom that's been built on a vast labor supply.
Countries don't usually become great powers when they're old and graying. They become great powers when they're young and vigorous. And if Xi Jinping wants to complete that transition, he may need to build a younger country that can pull it off.
How did we get here? After the creation of the People's Republic of China in 1949, the government trained tens of thousands of, quote, barefoot doctors to bring health care to poor and rural areas. The result? Mortality rates plummeted and the population growth rates skyrocketed. By the 1970s, China was facing food and housing shortages. In 1979, its leader, Deng Xiaoping, decided to limit most couples to just one child. And it worked. The average births per woman dropped to less than 2. However, there was a social consequence to this. The traditional preference among Chinese parents for sons caused many parents to abort female fetuses. The imbalance grew to the point where there were 120 men for every 100 women. Over time, women became very picky about possible husbands. Some rural men began to buy wives from human traffickers. In early 2018, authorities rescued 17 Vietnamese women and arrested a gang of 60 traffickers who had been selling women in China. The change to allow 2 children was meant to fix the nation's demographic problems. But after an initial spike in the birth rate in 2016, the 2017 numbers didn't appear to be as large.
The indications are that people won't be rushing out to have kids. They may see a temporary bump in the number of children, but whether that will be a lasting change that will affect China's demographic trajectory seems very much in doubt.
Well, you find reports like that, a lot of them, on the website BloombergQuint.com. And there's lots to talk about, of course, over the course of the day. You'll find all of that right here on Bloomberg Quint Live. Right now, here are just a few stories that you'll find if you log on. India's Oil Minister Dharmendra Pradhan has ruled out the rollback of fuel price deregulation as a long-term solution to the volatility of prices of petrol and diesel. And instead, the Oil Ministry is coordinating with the Finance Ministry to bring petroleum products under the ambit of the Goods and Services Tax, a move that should reduce the effective taxation on the fuels. Now, responsible for about half of the banks responsible for about half of India's internal trade have joined a consortium that aims to introduce blockchain technology in order to speed up processes and reduce hurdles to approving new loans. That's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.